Good morning and welcome to T-Hub Capital, the Investors Lounge, the podcast where we explore financial market dynamics, emerging trends, and the insights that shape successful investments. Each week, we'll delve into the strategies and analyses that drive our investment decisions. You'll get an insider's perspective on the factors influencing markets and the potential winners and losers of tomorrow. Subscribe to the podcast to stay ahead of the curve and make informed investment choices. Enjoy listening.
Welcome to T-Hub Capital's The Investors Lounge weekly newsletter. Today's date is the 28th of April. Let's dive into the week's stock market news. European stocks rally on trade optimism. Economic concerns persist. European stock markets registered significant gains as positive signals emerged from the United States regarding international trade disputes. The Pan-European Stocks Europe 600 index concluded the period 2.77% higher in local currency terms, spurred by indications from U.S. President Trump suggesting a willingness to de-escalate trade tensions with China and his retraction of threats against Federal Reserve Chair Jerome Powell. Major national indexes followed suit, with Germany's DAX index climbing an impressive 4.89%, France's CAC 40 advancing 3.44%, and Italy's FTSE MIB adding 3.80%. The UK's FTSE 100 index also posted a solid gain of 1.69%. Despite the market optimism, uncertainty clouds the European economic outlook. European Central Bank ECB chief economist Philip Lane acknowledged that tariff uncertainty would likely curb economic growth, but he told Bloomberg News that a Eurozone recession remained unlikely due to the bloc's diversified trading relationships. However, ECB President Christine Lagarde, in an interview with The Washington Post, did not exclude the possibility that policymakers might need to revisit the central bank's growth forecasts during their next meeting in June. Concerns were more pronounced in Germany, where the government revised its gross domestic product forecast for the current year downward, now anticipating stagnation instead of the 0.3% expansion projected in January, citing the impact of U.S. trade tariffs introduced earlier in April. Echoing these worries, Bundesbank President Joachim Nagel stated during the International Monetary Fund meeting in Washington that trade tensions would significantly affect Germany's export-reliant economy, potentially leading to a slight recession after 2 consecutive years of GDP contraction. Recent business activity data presented a mixed picture. While purchasing managers' surveys compiled by S&P Global indicated that Eurozone business activity slowed in April, it remained marginally in expansion territory. The composite index registered a preliminary 50.1, down from 50.9 in March, held back by a faster reduction in new orders and waning confidence. Activity in the services sector weakened slightly, although manufacturing showed resilience, expanding for the second consecutive month despite the U.S. tariff threats. In the United Kingdom, economic indicators were also varied. Official data revealed an unexpected 0.4% seasonally adjusted rise in retail sales volumes for March, contrasting with economists' projections of a decline. However, consumer confidence fell in April, pressured by rising energy bills and financial market volatility, according to research firm GfK. Separately, the IMF revised its estimate for UK economic growth in 2025 downward, from 1.6% to 1.1%. Now our insight into alternative markets, capitalizing on innovation, investment opportunities in European biotech and life sciences. Europe possesses a robust foundation of scientific talent and groundbreaking research in biotechnology and life sciences, creating a fertile ground for investment. While recent discussions, such as those at the EIB Group Forum in Luxembourg highlighted by Invest Europe's CEO Eric T. Montgolfier, point to the need for a more structured financial ecosystem, the current landscape presents distinct opportunities for informed European investors willing to engage with the sector's potential. A significant opportunity lies in the early stage segment. Current data indicates a concentration of venture capital in later stage funds, leaving promising early stage companies relatively underfunded compared to previous years. This imbalance, marked by an 86.7% decline in capital raised by early stage funds between 2021 and 2023, creates a potential value proposition for investors. By stepping into this gap, investors can gain access to cutting-edge innovation at nascent stages, potentially securing favorable valuations and backing the future leaders of European biotech before competition intensifies. Financing these pioneers today is key to unlocking tomorrow's breakthroughs. Furthermore, the observed decline in committed capital from government agencies, down 63% over the same 2021 to 2023 period, underscores the increasing importance of private investment. While public funding plays a role, its current trajectory cannot single-handedly sustain the pace of innovation. This elevates the opportunity for private capital, from venture funds to institutional investors, to become a more decisive force in shaping the European life sciences landscape, driving competitiveness and potentially realizing significant returns by backing well-chosen ventures. The current reliance of many existing venture funds on their dry powder, previously raised but uninvested capital, signals another window of opportunity. While this allows for stable investment levels in the short term, it points to an impending need for fresh capital inflows as these reserves deplete. This situation creates attractive entry points for limited partners considering commitments to new or existing European life science venture funds, as well as for direct investors looking to deploy capital before a potential tightening occurs. Looking ahead, calls for structural improvements within the European ecosystem represent potential upside catalysts for investors. Proposed enhancements, such as smarter regulations favoring long-term innovation investment, targeted public-private initiatives to de-risk early stages, improved cross-border coordination, and better alignment of public funding mechanisms like tax credits, could significantly boost the sector. Investors who anticipate these positive shifts and position themselves accordingly, backing companies poised to benefit from a more harmonized and supportive framework, stand to gain considerably. In essence, while challenges in structuring sustained investment exist, Europe's fundamental strengths in biotech and life sciences, combined with current market dynamics and potential structural improvements, offer compelling prospects. For European investors with the right strategy and vision, there are significant opportunities to fund transformative innovation and contribute to the continent's leadership in these vital industries.
Thank you for listening to this episode of Hub Capital, the Investors Lounge podcast. I hope you found this content interesting and inspiring. If you enjoyed this episode, don't forget to subscribe to the podcast so you don't miss a single episode, and share it with your friends and colleagues who might be interested. To learn more about T-Hub Capital and our activities, visit our website, hubcapital.com. You can also follow us on our LinkedIn page. See you soon. All the best from the T-Hub Capital team.